Welcome back. Now, IT is clearly the sector of the day. The Nifty IT index is up close to about 2.5%, and individual mid-cap names like Persistent, Coforge, Zensar, where the numbers were okay, even that's up close to about 6.5%. So quickly, let's take you through what's working for these IT companies and what they've reported. One, Persistent Systems, and this is a stock which has done so well. Its 5-year stock price CAGR is 75%. Despite that, that stock continues to move up 10%. The reason is growth and growth. The company continues to deliver strong growth and higher than the industry this quarter at close to about 5%. Secondly, growth was delivered by banking and financial services, which we know is strong. But a vertical which was impacted for the company, high tech, it's nearly 40% of their revenue, but that is expected to recover, and the company holds on to its aspiration of achieving $2 billion by FY27 and expanding margins by 200 to 300 basis points over the next 2 to 3 years. Now, Coforge is the other one, where the management themselves are saying that this is going to be a standout year for the company. Very strong. So reported numbers get boosted up because of the Signity acquisition. But if you strip that out, organic revenue growth was 6.3%. And the company says that momentum will sustain in Q3 and Q4. There will be robust quarters despite the weak seasonality because of, look at the way their order book is. Their order book itself has gone up 40%. Which has to be executed in the next 12 months, which means the next few quarters are going to be strong. Even on margins, the company said that they're confident about exceeding their gross margin guidance of 50%, either 50 basis points. Either they achieve it or maybe they'll try and beat it. And even Signity, this was an acquisition which the company did a couple of quarters back. There was a lot of skepticism surrounding it. I remember when the acquisition was announced, the stock fell. But Signity is turning around. This was the first quarter where they've consolidated it. And look at the Signity numbers. Revenue growth 6%. Even the margin performance is likely to be better than what they had earlier anticipated. Now, Zensar is saying that Q3 will see an impact of furloughs, but overall the impact of furloughs will be less than what we've seen in Q2, and Q3 will be better than Q3 of last year. Margins will be mid-teens within a tight band. Their pipeline is good, and the company is working on a few large deals. But a quick word, pull up even other stocks like First Source, and the other one is Mphasis. Now, these are companies with very high BFSI exposure, and we know BFSI has done well for all the IT companies. So Mphasis reported their numbers. BFSI was an okay performance, but I think the expectation is that going forward, things will only get better. So Mphasis is seeing a bit of a late reaction now.
So there's some focus on the small cap or the mid cap IT space more than the large caps. Even Niket was saying
Niket was saying, right, large cap IT companies have not delivered this kind of growth rate, which you are seeing with mid cap. Because of their large base, it's been hardly 1-2% kind of a quarter-on-quarter revenue growth. And these companies are talking about 5-6% revenue growth quarter-on-quarter. Year-on-year, of course, much more.
Yeah, so big move there. Thank you for explaining that to us, Reema. That's all about the mid-cap IT space, big moves that we are seeing in that sector. But let's move on. A small programming note as we slip into a break. The biggest market experts will be joining us in the CNBC-TV18 studios. And this year, we are giving you a chance to meet your favorite market experts. 5 super fans will get a chance to visit the CNBC-TV18 studios on Thursday to interact with the biggest market experts. Write to us on our social media handles tracking 25 years of CNBC-TV18 to take your chance to meet the CNBC-TV18 Market Movers Forum at 3 p.m. this Thursday.